Something unusual is happening on Wall Street right now, and it's got everyone talking. While many firms are tightening budgets, trimming staff, and preparing for a slower 2026, Bank of America is doing the opposite. It's doubling down, going all in on massive mergers, billion-dollar financings, and some of the biggest corporate deals we've seen in years. The question is, why? Why is Bank of America betting big on mega deals right now when so much of the market still feels uncertain? To understand the move, you first have to look at the broader backdrop. For nearly 2 years, the U.S. deal-making environment was frozen. High interest rates made borrowing expensive, regulators tightened scrutiny on mergers, and corporate boards became cautious. The M&A pipeline, once the heartbeat of Wall Street, slowed to a crawl. But in late 2024 and throughout 2025, the mood began to shift. Inflation eased. The Federal Reserve hinted at potential rate cuts in 2026. Stock markets stabilized, and corporate valuation, especially in tech, energy, and healthcare, started to look attractive again. That's when Bank of America spotted its opening. Here's the thing most people miss. In finance, timing is everything. Banks don't make big profits when markets are calm. They make them when momentum returns. And right now, Bank of America's strategy is simple but bold. Position itself early for the next M&A wave before the competition fully wakes up. They're reading the cycle differently than most. While others see risk, Bank of America sees opportunity, a moment when cash-rich corporations want to expand, consolidate, or reposition for the AI and energy transitions reshaping global business. The logic: if rates start to fall next year, deal volumes will surge, and whoever's leading those transactions will capture billions in advisory and financing fees. That's the game Bank of America wants to win. But it's not just timing, it's confidence. Bank of America's balance sheet has quietly become one of the strongest among U.S. banks. After years of conservative risk management, it's sitting on enormous liquidity, capital that can be deployed into deals quickly. That gives it an edge in underwriting mega transactions that smaller competitors simply can't touch. In other words, they're not waiting for deals to happen. They're making them happen by offering financing, arranging partners, and connecting corporate buyers who are ready to move. It's a classic power play. Use strength in a cautious market to lock in relationships and fees before everyone else jumps back in. So what kinds of deals are we talking about? Think massive energy consolidations, oil majors buying clean tech startups, utilities merging to expand renewable capacity. Think telecom and infrastructure, companies racing to modernize 5G networks or acquire data centers to support AI computing growth. Think healthcare, pharma giants scooping up biotech innovators before competitors do. These are strategic mega deals, not speculative ones. They're about long-term positioning, not short-term hype. And they all have one thing in common. They require enormous financing and complex advisory, the kind of work only a few big banks can handle. Bank of America's executives have been clear about this strategy. Their bet isn't just on individual deals. It's on a broader economic comeback led by corporate America. They believe companies are done waiting. After years of cutting costs and hoarding cash, CEOs are ready to grow again through mergers, acquisitions, and investments that create scale and efficiency. And when that shift happens, the banks that already have the deal teams, the client relationships, and the capital lined up will dominate the next decade of Wall Street profits. Still, there's risk, and Bank of America knows it. If rates don't come down fast enough, if the economy slows, or if regulators block major deals, the payoff could take longer than expected. Advisory pipelines can dry up quickly when markets turn nervous again. But that's exactly why the bank is betting now. Because in every cycle, the winners are the ones who act while others hesitate. During the 2008 crisis, the bank made bold moves, acquiring Merrill Lynch and expanding its investment banking presence just as competitors were retreating. Those bets paid off for more than a decade. Today, it's playing the same playbook. Go big when everyone else is afraid to. There's another layer to this strategy, one that's less visible but just as powerful. Bank of America is positioning itself as a bridge between the old and new economies. On one side, traditional industries, energy, manufacturing, finance, that need restructuring and scale. On the other, emerging sectors, AI infrastructure, green tech, biotech, that need funding and distribution. By backing deals that connect the two, the bank isn't just chasing fees, it's shaping where capital flows next. Essentially, it wants to be the banker behind the next generation of industrial transformation. That's not just opportunistic, it's visionary. So when you see headlines about Bank of America underwriting record bond deals or advising on multi-billion-dollar mergers, it's not randomness, it's a signal. They're betting that the next global business cycle is already starting, quietly under the surface. While others talk about uncertainty, they're preparing for acceleration. Because to them, uncertainty isn't something to fear. It's the window before everyone else catches on. So why is Bank of America betting big on mega deals now? Because it knows that when confidence finally returns, when rates ease, when CEOs get bolder, when investors start believing again, the firms already at the center of the deal-making machine will own the future of Wall Street. And if their timing is right, 2026 won't just mark the comeback of M&A, it'll mark the moment Bank of America reclaims its place as the power player of global finance. Because in a world full of hesitation, the bold still write the next chapter.